man, we've got some whale games going on. Bitcoin down 5.5%, getting a big dump to the downside after a positive day yesterday as more individuals continue to get wrecked. Altcoins severely down today, 7%, 8%. A really red day in the market today. But what is causing it? Why is the market red? What happened? We're going to break all of that down now, as well as try to figure out where could we go from here. So smash up the like button. Don't forget to subscribe, guys. As always, check out the links in the description to trade using BYBIT or PRIMEXBT. PRIMEXBT offering you guys up to $7,000 when you guys deposit. It's a nice interface, nice for you to use. You got all your trend lines, all your graphing features, and when you deposit, you can get up to $7,000. BYBIT have now increased their bonus back again, so you guys can get up to $4,000 in various different bonuses when you sign up with BYBIT. Again, BYBIT's pretty awesome because it uses TradingView charts, so do consider checking those out. Now, before you do that, before you touch any of these trading platforms, I have a word of warning for all of you guys, and that is do not, I repeat, do not get wrecked. When I trade on spot. I don't use margins and I don't use leverage, because if you do, you're contributing to this. You want proof? Let me head over to CoinGlass. Let's look at the liquidation data. 115 million in liquidations have been wrecked here as of 7th of June, 1 a.m. Crazy wreckage, and this is what continues to make things difficult here for the market. So let's recap what exactly happened. Well, the first time we tried to break from 31, you saw we entered this yellow channel, which I was talking about, and then we broke straight back down to the downside. Now, because you fell so sharply to the downside, it makes it predictable that you can easily quickly pump. We saw exactly that, exactly as we said. We also then knew that we'd face with some resistance between these yellow bands. Exactly the same happened. We waited to see if there would be a retest. No retest. Straight dump back down. And why does this happen? This happens because people place long positions around here with their stop losses, okay? And what happens? If a whale can just move the market a little bit below this 31 line, they know all those amateurs who haven't taken time to learn about how to trade in crypto have all left their stop losses there with their leverage positions, and they can trigger them all down to the downside. And that is why we get this cascading domino effect in crypto. And it's not a good thing. This is holding us back in crypto. One of the reasons why we cannot create sustained pumps in crypto is the greed element. And you can see in the community who is proliferating this, who is doing this. And it's that greed element which ultimately makes people go on heavy, long leverage positions here, waiting for a quick buck instead of letting this play the course over time and trading on spot. And that's the difference here. That's why whales are just sitting there laughing as they pick up your pocket money day after day after day, and they repeat the pattern. This is whale manipulation. And if you want evidence that whales are the ones that are buying up your coins, we don't have to look too far. We can find that. We can see here, these are the number of addresses with balance greater than 10K. And you can see these have just been increasing as more and more whales are accumulating. So if you're selling to people with more than 10K in there. Okay, so now let's take a look at what's going on in the macro economy to cause some of this, because we want to blend the technicals with the fundamentals. You guys know that's what this channel is about. So fear and greed index is sitting at 15. Now, no doubt when we take another refresh of this is going to fall a little bit more, as I suspect that 15 reading was taken before this dump. So with this dump, market's going to be a little bit fearful again. You can see altcoins are getting hit. Let's look at the wider economy, and we can see first that the Asian markets did not have a positive day. And the reason they've not had a positive day today versus yesterday when they had a really good day was that Australia announced an interest rate hike of 50 basis points. This was far larger than the markets were expecting. That's one of the reasons the Asian markets fell to the downside. We've also got the European markets all in the red slightly today. Well, not slightly, some of them quite a lot, apart from the FTSE, which is relatively flat. The DAX down almost 1% and 0.75% on the CAC. But they are still fearful of inflation, okay? So that's continuing to weigh. And this is exactly what I said. I said this to our course member lives over the weekend. I said it to you guys in the videos yesterday. This is as predicted. I predicted the fact that we could get a rally early in the week, and then you see volatility as you get closer and closer to the inflation reading, which is on Friday. Remember, Friday we get the CPI data for May, and then after that, next week on the 14th and 15th, the FOMC will meet to decide their next interest rate hike. And the market has already priced in a double rate hike, okay? 93% of the market is priced in a double rate hike for this meeting, and then 86% have priced in another double rate hike for the following meeting. So what would the Fed have to do to surprise us? They'd have to do a triple rate hike, right? Or they'd have to really speed up quantitative tightening, and that could spook the market. Anything less than a 0.5% interest rate hike could actually allow us to rally. So this is what the markets are waiting for. More importantly is the CPI data on Friday. Remember, we want to see this CPI data inflect down. If we don't get that inflection down, markets are going to be like, hang on a second, you're increasing interest rates by 0.5, but it's not having an effect. So maybe you're going to have to go a little bit harder. Maybe you're going to have to go 0.75, 1% next time. So that will spook markets if this does not inflect down. We need this reading to come in at 5.9, 6 at pretty much the very highest. We need to see it come down here. Okay, so that brings us on to this, which is the US 10-year Treasury Note. So the US 10-year Treasury Note yesterday ticked above 3%. And why is this so critical? 3% was that mark, which is a psychological level for a lot of investors, where the 10-year Treasury Note becomes very, very attractive. And the reason this becomes attractive, you've got to remember, the 10-year Treasury Note, or any Treasury Note from the US, is considered as risk-free money. And so if you can earn 3% on a Treasury Note, a bond, the theory is that why would you then put money into equities, right? Why would you risk and go try get a 5%, 6% on equities when you could be getting 3% guaranteed on a Treasury Note, okay? And why is this happening? Well, we know why this is happening, right? We announced that quantitative tightening started. And when quantitative tightening started, this means that the government is no longer buying bonds. If they're no longer buying these bonds, that means there's an increased supply of bonds, which reduces the price of bonds. We know the yield of a bond is inversely correlated to the price of a bond. So the price goes down, yield goes up, and the yield is now past 3%. And that means growth stocks, high risk startups and growth stocks, things in the NASDAQ, Bitcoin's included in that as well. Anything which is risk on becomes less attractive. And that's one of the reasons we're going to see a struggle in Bitcoin. Okay, so that brings us on to what happened here. So we've been thrown back into this pattern. We know we've been here for a long time, right? Nothing new here. We've been channeling the whole of May, pretty much been channeling alongside these two boundaries between 31 at the purple line, 28,600 on this line. And again, we're back to this pattern again. Are we now going to come towards 28,600, or are we going to try again at 31? We've got to be careful, because if we fall below 28,600, you guys know that my price point then brings us to the bottom of the wedge. Let's switch over to the Fowley to make this a little bit clearer for you guys. We start heading to the bottom of the wedge, then you're looking at price points here of about 26,000, but that's only if we break the wedge. We've seen good support coming in around this line, right? Around 30,000, 29,500, we've got good support. That's where we managed to hold it before our last pump to the upside. Will the same happen? If not, could be revisiting 28,600. If we lose that level, things could get a little bit nastier to the downside. But this is now worrying now. This is 2 times we've gone up to this level and been thrown back. This is all down to greed and leverage. So guys, if you are going to trade, if you're going to use BYBIT in the description, or you're going to use PRIMEXBT, please don't do so with leverage. Please don't get yourself wrecked. Know what you're doing. Only trade with what you're willing to lose. And we can't stress that enough. Don't get yourself wrecked, because ultimately that's not good for the whole crypto space. It's not good for the ecosystem that people are so greedy that whales are sitting there laughing, knowing as soon as you get to obvious breakpoints, people are not just longing. It's one thing to long on spot, but they're longing with huge leverage positions. And the problem with leverage positions is whales only need to move the market a small percentage to liquidate all your positions. And that's the wreckage we're seeing in the market. And that's not good for Bitcoin, because it's delaying our pump to the upside. And that's not good, because every time we do try to go, the greed kicks in and we get thrown back down. Greed kicks in and we get thrown back down. Come on, don't make it so easy for the whales. They're sitting there laughing at you and taking your money. So take this opportunity to educate yourself, learn how to get better at trading this crypto, and that's ultimately going to stand us in good stead. All right, guys, so there we have it. There is your update on what's going on in today's market. No doubt I'll be back with a few more videos as the day progresses, as the UK markets progress. But it's a bad day here for crypto, back in the red, and it's expected. It's going to be a volatile week. Be ready for pumps, be ready for dumps. Don't get caught out getting liquidated. Stay safe out there. If you're dollar cost averaging, great. Wait for those low price points. Set some limit orders for yourself to get into the positions, and just keep buying on spot, dollar cost averaging at pullbacks at good prices, and you're going to be fine over the long run. Hope you guys enjoyed this video. Don't forget to smash up the like button and subscribe. We're doing a 10,000 subscriber giveaway. Yes, thanks to BYBIT, we are giving out a free iPad. So a free iPad, if we're not shipping it to you, we will send the equivalent in cash to your BYBIT account, but you need to be subscribed to this channel and you need to be signed up to BYBIT. Yes, using my link below, I'll be able to see a list. We'll then do a raffle to pick the lucky winner in celebration of our 10,000 subscribers, which is coming up. So make sure you hit up the like button, make sure you're subscribed. Go sign up on BYBIT and deposit. All you need to do is deposit a little bit, even if it's $1 or $2, and then you get entered into this prize draw. Thanks for watching, guys. We'll see you in the next one.